Hello and welcome to the week ahead video with me, David Madden. Now before we take a look at the major events of next week, let's just take a quick recap of the major events of the week just gone. At the start of the week, we saw a lot of pressure on global stock markets, including the US30. It came under pressure here in line with other stock markets. This was largely due to concerns about higher inflation, the prospect of the Federal Reserve potentially tapering its bond buying scheme in the next few months, possibly in early 2022. And there was also a relatively large move to the upside in US government bond yields. Bond yields across the board ticked up, but in particular the US 10-year yield. Those fears all going to put pressure on stock markets, but since then we have seen a bit of a rebound. Why have we seen a rebound? Well, stock markets in Asia performed well at the back end of the week just gone. This was largely due to concerns, the old concerns about the Chinese property market or debt levels of certain Chinese companies. They dominated the narrative at the beginning of the week, but those kind of fears evaporated towards the end of the week, and hence why we saw a move to the upside in stock markets around the world, including the US30. So if we take a look at the price action in the last few days, we can see the US30 has been trending higher. While it continues to hold above these three simple moving averages, it's likely the near-term upward trend will continue. Moving on higher from here, we could look to target 35,064, and a move beyond that could target this zone here of 35,202. If you do see a move to the downside in the US30, we could see support come into play from this simple moving average here, which comes into play at 34,500, and a break below that could see us retest this zone here in around 34,118. Now, looking to the kind of major events of next week, we're going to have the Fed minutes are going to be posted on Wednesday. On Wednesday, we're also going to have US CPI. On Thursday, US PPI, and on Friday, US retail sales. Now, why is this important? It's going to be all about how well is the US economy performing, how well is the US recovering. In September, the Federal Reserve kept their policy unchanged, meeting forecasts, but they also indicated they might look to taper their bond buying scheme in the next few months should the economy continue to improve at a respectable rate. Now, in the week just gone, we have seen some impressive employment numbers from the US. The ADP reading came in at 568,000, well above expectations. The most recent US jobless claims reading in the US fell to a 4-week low of 326,000. Now, this video has been recorded on the Friday of non-farm payrolls. Now, the report has yet to be published, so I can't comment on it. Unfortunately, some of the levels and the price action that I talk about might be out of date, but nonetheless, of the employment numbers we've seen from the US so far this week have been impressive. That adds weight to the argument that the US economy is recovering at a respectable rate, so it's possible we could look to see in the next few weeks and months the Federal Reserve announcing the beginning of its tapering program, but it also depends on certain factors, including today's non-farm payrolls report. Now, traders are going to be looking at the minutes of last month's meeting to kind of find out the further thinking of what the Federal Reserve had in mind when they made their update last month. Also, the CPI numbers, the PPI numbers, and particularly the retail sales numbers that are out next week will really give a flavour of demand in the US, especially the retail sales numbers, because as we've seen from the most recent jobs numbers in the last few weeks and months, broadly speaking, the unemployment rate is coming down. Fewer Americans are out of work, more Americans are in jobs, but the question is, are they going out and spending money? And that's what all these reports, CPI, PPI, and retail sales, are going to be all about. Are Americans going out and spending money? Because it's going to be a push from in consumer activity is what's really going to drive along the US economy. Now, obviously, if we're talking about the possibility of tapering and the rise in bond yields, with that we have seen a pretty impressive move to the upside in the US dollar index. So This here is euro dollar. The currency pair earlier this week fell to its lowest level since June 2020, which really underlines how bearish the downward move has been. While it continues to hold below these three simple moving averages, it's likely the more recent bearish trend will continue. A move lower from here could see us head down towards 1.1500, and a break below that could see us a target 1.1400. If we do see a move to the upside in euro dollar, and we do manage to kind of retake this simple moving average here, we could look to kind of retest this peak here, the peak of early October, in around 1.1636. As I mentioned, I haven't this video has been recorded in advance of the non-farm payrolls report, so we're likely to see volatility in the US dollar and US stock markets. That's all from me from this week. Thank you very much.
Thank you.